Today is the 30th of May 2022. It is Memorial Day in the United States, and so if you are in the US, I hope that you are enjoying a peaceful and relaxed Memorial Day. Markets in the US are closed or have limited trading hours, but they are trading in the rest of the world as normal. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500 and the NASDAQ, because both those markets, in fact stock markets around the world, have formed an important trough, and we're going to be talking about what that trough is and discussing what we expect to happen next. So here is the analysis that I've been presenting recently for the S&P 500. I'm actually using data from Yahoo Finance for the ES futures contract, but it is the same cycle analysis, of course. And here is the very important trough in March of 2020, which recently I've referred to as the pandemic trough, because it is just possible that the pandemic caused a little bit of distortion in the cycle picture. But in terms of the analysis that we've been looking at, we are considering that to be a trough of at least 54-month magnitude in the S&P 500. Here is the 18-month cycle trough that I've been favoring, which is positioned, as you can see, at the end of September or in the beginning of October. Now, for several weeks, I've been speaking about the fact that the markets had turned downwards, and you can see this bearish cycle shape that has developed since the October trough. And we were expecting an 80-day cycle trough to form in the markets, and indeed, that trough has formed in last week's market update, and if you haven't been tracking these market updates, I would encourage you to go back and take a look at previous market updates, because I try not to repeat myself too much in these videos. In last week's market update, I mentioned the fact that the trough might possibly have formed in the week before, so let's zoom in and take a look at that in just a little more detail. So there is that trough over there on the Friday, and as you can see, the market action last week was very bullish, and price has clearly formed a trough or a low point in the markets. Now, we have been discussing the fact that we're expecting an 80-day cycle trough to form in the markets according to this analysis. But as pointed out in last week's market update, it is possible that that trough could be a 20-week cycle trough. That's based on the analysis performed on the basis of the initial cyclic model. And as I mentioned in last week's video, we have this circle and whiskers for the 40-week cycle trough over here. I mentioned that it was therefore possible that this might indeed be a 40-week cycle trough. Let's zoom in a little bit and consider what the magnitude of this trough is. Let's speak for a moment about these circles and whiskers. What do they actually mean? The circle is, of course, the exact day on which the next trough of a particular cycle is expected to form on the basis of the recent wavelength of that cycle. Sentient Trader looks back 6 waves of each cycle, at least. Some of the shorter cycles, it looks back a little bit further to get a slightly different average, but it calculates the recent average of that cycle, and it plots a circle at that position. That's based on Hurst's suggestion. He was the one who suggested positioning a circle at the next expected date of a particular cycle's trough. And to each side, you can see we plot these lines. We call them the whiskers. The result is a circle and whiskers combination, and that line represents the reasonable amount of time in which that trough could occur. As you can see, that whisker extends to the left. It extends back to the first week of May. And so when a trough forms, even though we're expecting an 80-day cycle trough, as you can see from this analysis, but it forms within the whiskers of a longer cycle, we have to ask ourselves what cycle magnitude has just formed a trough. Is it the 80-day cycle trough, or is it indeed the 40-week cycle trough? This is a really important aspect of performing a Hurst cycles analysis. We can anticipate a trough forming, and generally we come up with what I call a level of confidence in the magnitude of that trough. So in this case, I was confident the trough would be of at least 80-day magnitude, but it could indeed be a bigger magnitude cycle trough. I think what has happened is that a bigger magnitude cycle trough has now formed. So let's discuss some of the indications that this might be a 40-week cycle trough that has formed. The first thing that I would like to point out is this pin symbol over here for the 20-week cycle trough. Now, I have discussed the positioning of that 20-week cycle trough in previous market update videos. This was one possible position for that 20-week cycle trough. Here was another one, and here was another one. I've discussed that in some detail. But was that indeed a 20-week cycle trough? What I do, and it's a very good habit to get into, in my opinion, is when a trough forms within a whisker, I start looking at other possibilities. And the first thing that I do is I go back to the previous trough in which I have a good deal of confidence, in this case the 18-month cycle trough at the end of September, and I measure the number of bars up to the trough that has just formed. I think you can see there that is 231 days that have elapsed since that end of September 18-month cycle trough. Now, the average length of a 40-week cycle is 272 days. And so at 231 days, this would be an early 40-week cycle trough. However, the fact that we have that whisker there and the circle is fairly nearby, as you can see over there, indicates that the 40-week cycle has been running a little bit short recently, and so it is possible that the 40-week cycle trough has formed. What I do is I divide that number in two to see whether there is a better possible position for the 20-week cycle trough, which of course I have pinned in this particular analysis, and so I am influencing the analysis. 1/2 of 231 is 115 days, and so I go back to 115 days and I ask myself whether I can see a suitable trough at that position. You will notice I have to keep moving the crosshairs because they're covering the price action, but 115 days exactly is where this trough formed towards the end of January. Let me turn off the measuring tool and highlight that bar over there. Now, is it possible that this low point in price is in fact where the 20-week cycle trough should be? One of the reasons why Sentient Trader always displays the pins on a chart, in other words, all the influences that I have made to the analysis, is because as time passes, very often those pins become incorrect and they should actually be removed from the chart. And so if we remove this pin over here, positioning the 20-week cycle trough, then we let Sentient Trader perform an updated analysis. This is what happens. Here is the same 18-month cycle trough here at the end of September, and Sentient Trader has positioned the 20-week cycle trough under this bar over here towards the end of January, and you can see it has positioned the recent trough as a trough of the 40-week cycle. And so this 80-day cycle trough that we were expecting, in my opinion, is now in fact a trough of 40-week magnitude. How does that change the bigger picture in terms of what we are expecting? Let's zoom out. You can see that the bigger picture still has the 54-month cycle trough over here in March of 2020. We have the 18-month cycle trough, of course, here at the beginning of October or end of September. And our next 18-month cycle trough is over here in early 2023. Whereas we were expecting a small bounce out of the 80-day cycle, followed by a drop into July for the 40-week cycle trough, that scenario has moved ahead. If this is indeed the 40-week cycle trough, as I think it most probably is, and we are witnessing the slightly bigger bounce out of the 40-week cycle trough now. But is that providing us with a very bullish picture? No, not really, because we still have a bearish cycle behind us. And so the first 40-week cycle following this trough at the end of September or early October is a bearish shaped cycle. And if this is indeed the 18-month cycle trough over here, we would expect a more bearish shaped cycle to follow to bring us down into the next 18-month cycle trough. But now there is a big danger with a Hurst cycles analysis that we start looking fairly far into the future, and we're talking about the next 18-month cycle trough or the next 54-month cycle trough. And by looking so far into the future, we remove our focus from what is happening right now. There is a really important point that I would like to make about the way in which we apply the Hurst cycles analysis to our trading decisions or our investing decisions. And it's a really important concept that sometimes gets pushed aside, if you like, particularly in these market update videos, because I am presenting a long-term outlook, and this is my expectation for what is going to happen. In other words, I am still expecting the markets to continue downwards. But it is very important not to let our longer-term expectation of what is going to happen blind ourselves to what is actually happening at the moment. And it is in tracking what is happening right now that the true value of this approach lies, rather than providing long-term projections for the future. We're going to zoom in a moment, and I'm going to discuss exactly what I mean. But before we do that, let's take a look at the other analysis that I presented in last week's market update video involving the initial cyclic model. Here is that analysis, and a quick reminder that the initial cyclic model is built as a result of the spectral analysis that is performed at the beginning of the analysis process. I presented this analysis last week, so I won't give you too many details here. You can go back and take a look at that video. The important thing is that the 18-month cycle trough has been positioned over here in June of last year. As I mentioned, some analysts believe that it occurred in July of last year. But the important thing in terms of what this analysis is telling us to expect is that the recent trough that is formed is of 20-week magnitude. And the 18-month cycle trough, or the next 18-month cycle trough, is this very neat nest of lows over here in September. I'm very intrigued by this analysis, and if we display the composite model line, you can see what the composite model line is telling us to expect in terms of what is happening now. Here you can see we have a bounce up out of this 20-week cycle trough, but fairly soon the markets will turn bearish again to bring the price down into this 18-month cycle trough expected in September. So again, I'm presenting a slightly longer term outlook. And as I've pointed out, that is a slightly dangerous thing to do because we need to focus on what is happening now. The longer term outlook provides us with some context to what is happening. And that context is that we are experiencing a bounce out of a trough. We are expecting it to form a fairly early peak and to then turn down and bring the markets lower. Some analysts have suggested that an 18-month cycle trough could have formed now, and that we are witnessing a bounce out of an 18-month cycle trough. When people are new to Hurst cycles, they often find it disconcerting discussing the magnitude of a cycle trough and the uncertainty that sometimes surrounds the magnitude of the trough. So how do you deal with that? Let's focus in on what is happening now, and I'm going to demonstrate to you the true value of the Hurst cycles approach in terms of constantly monitoring the cycle picture as it unfolds. In order to do that, I'm going to switch to a different workspace. This is in fact the same analysis, still looking at ES data, and here you can see is the 40-week cycle trough. But now what I'm going to do is focus in on what has been happening since that trough formed about 10 days ago. On a daily chart, if we zoom in, here we go, we can take a look at things such as the FLD to confirm the magnitude of the trough that has formed. This is the 20-day FLD, and as you know, I quite like to track the interaction between price and the 20-day FLD, in fact all FLDs, but the 20-day FLD provides a very useful one to take a look at in these market update videos. You can see that price crossed above the 20-day FLD on Thursday of last week and thereby generated a target. I think that target is just over 4,200, somewhere like that. I don't think it's quite been met yet. But the fact that price crossed over the 20-day FLD provides us with confirmation that the 20-day cycle has formed in the markets. Now, because of the principle of synchronicity and harmonicity, we know that if the 20-day cycle trough has formed in the markets, then the longer cycles that were expected to form troughs at this time would also have formed their trough at the same time. Therefore, when price crosses a shorter cycle FLD, we can confirm that a longer cycle trough has formed in the markets. If we add another FLD, let's add the 40-day FLD in here, you can see that price has also crossed the 40-day FLD and therefore has confirmed that the trough that has formed in this market is of at least 40-day magnitude. What about the 80-day cycle FLD? there is that FLD, and as you can see, price came up to the level of that FLD, I think earlier in pre-market trading on Sunday night. If price crosses above this 80-day cycle FLD, that would confirm that the trough is of at least 80-day magnitude. Are we expecting price to cross the 80-day FLD? Yes, we are, if this is a 40-week cycle trough that has formed. But now, what do I mean by focusing on current price action? What I mean is that we watch as the cycle shapes unfold. Bear in mind for the moment that we were expecting a trough of 80-day magnitude. We knew that it was possible that it could have been a 20-week cycle trough, or indeed a 40-week cycle trough. The longer magnitude cycle trough that has formed, the more bullishness we will see, of course, because of these cycles pushing upwards. Now, if this was only an 80-day cycle trough that had formed, then the next 80-day cycle trough, which is expected, of course, in July, would have been a bigger magnitude cycle trough, and so we would end up with a fairly bearish-shaped cycle. Remember, cycles make M shapes in the market, and so we would expect that kind of a cycle. If, however, this is a 40-week cycle trough that has formed, then the next 80-day cycle trough will form at the same time, but the difference will be that we will experience a more bullish cycle as price moves towards that date. And so if you're making trading or investing decisions on the basis of your Hurst cycles analysis, the first thing that you need to determine is what magnitude cycle trough would be worth it for you to invest or to make your trade. If 80 days is a strong enough cycle, then you would have been interested in entering into a long trade here, bearing in mind that it would be of at least 80-day magnitude, because an 80-day cycle trough is good enough for you. One way of entering into this trade would, of course, have been to watch price crossing the 20-day cycle FLD, which it did here on Thursday. That's the FLD trading strategy that I speak about often in these videos. That is an A category interaction. But if you missed that entry, then you would be watching with great interest as the cycle shape plays out, and when the first 20-day cycle trough is expected to form, you would be watching to see whether price finds support at the level of the 20-day FLD. If it does, then we can take a look at this first 20-day cycle, which is so far certainly looking like a bullish cycle. The bullishness of that cycle will give us some indication of the mood of the market, and of course of the magnitude of the trough that we are bouncing out of. Let's take a look at a 4-hour chart of this same instrument and see how the first 5 or 10-day cycles have played out. In this 4-hour chart, we can see the same 20-day cycle FLD, which is being crossed over there on Thursday, and price is rising up. Here is the nest of lows for the next 20-day cycle, and here is the FLD at about that time. And so we would be looking at price finding support at about the level of that 20-day cycle FLD, at which point we can take a look at the full 20-day cycle and determine the shape of that cycle. Is it a very bullish cycle? Is it just a slightly bullish cycle? Or is it going to turn bearish? The important thing is to track the way in which the markets respond to the different cycle influences over time. We will let the market show us whether it is more bullish than expected or whether it is beginning to turn bearish. As mentioned, in the back of my mind, I have the opinion that I still think the markets are going to turn down and move lower into September of this year. But that certainly doesn't mean that I'm going to simply sit back and wait until September for another important trough to form in the market. I'm going to be watching every day to see how the markets are influenced by the cycles. Let's take a look at the much shorter cycle here, the 5-day cycle, to see how the same sequence of interactions between price and the FLD are playing out even at that cycle level. So here is our 40-week or at least 80-day cycle trough. Here is where price crossed above the 5-day FLD, generating a target to the upside. What do we expect to happen at about the time that the first 5-day cycle forms in the market? We expect price to come back down to the 5-day cycle FLD, find support at the level of that FLD, and then continue upwards. We identify these interactions as a category A interaction and then a category B interaction as price finds support at the level of the FLD, and then a C category interaction as it pulls away from the FLD to the upside. What we are expecting next is a category D interaction where price comes down to form the 10-day cycle trough. Now, as you can see, that 10-day cycle trough is due now. It was expected on Sunday, but it is, of course, allowed a bit of leeway because of the principle of variation. And so we are expecting price to come down below the 5-day FLD to form its 10-day cycle trough. But it is also possible that price doesn't make it below the 5-day FLD. What would that mean? That would mean that we have a more bullish than expected or a more bullish than normal cycle that is playing out here. As we start getting indications from the shorter cycles about the influence of the cycles on the price action, if that turns out to be bullish, then that effect will ripple upwards. If the bullishness continues, then of course we will have to adjust our longer term expectation in terms of markets coming down lower in September. I hope that this makes sense. We develop a longer-term picture to provide us with some context, but then we watch very carefully as market action unfolds. And that is what we will be doing to determine the correct magnitude of the cycle trough that has formed. Now let's take a look at the NASDAQ. And again, the NASDAQ has provided us with an overall picture which has explained the recent bearishness in the markets in terms of this being the first 18-month cycle that played out from December of 2018 until March of 2020. This is the second 18-month cycle, and here I have again influenced the analysis and positioned the 18-month cycle trough over there at the beginning of October. And we are now in our third 18-month cycle, bringing us into the next 54-month cycle trough, which, as mentioned, we are expecting towards the beginning of next year. Again, that is the bigger picture, but the fact that we are expecting a big magnitude cycle trough to form early next year does not mean that we are perpetual bears, because price is now clearly bouncing out of a 40-week cycle trough in the NASDAQ as well. Let's zoom in and take a quick look. Here you can see the nest of lows for the 40-week cycle trough over here under this trough over there, and it seems fairly clear from recent price action that that 40-week cycle trough has formed. Many people ask me why it is that Sentient Trader doesn't position its diamonds earlier. Why is there still a nest of lows under there instead of a stack of diamonds? The answer is because the nest of lows provide us with more important information, really, in terms of what we are expecting to happen in the markets. The diamonds are placed under there once we can, as the analyst or Sentient Trader, if Sentient Trader is performing the analysis, once we can confirm with a certain degree of confidence that the trough has formed. I won't go into detail here about all the things that we require to develop that confidence. Certainly, looking at this picture, it seems fairly obvious that the 40-week cycle trough has formed, but Sentient Trader doesn't have quite enough confidence just yet to position those diamonds there. Here again is the 20-day cycle FLD, which was also crossed on Thursday of last week. And so again, we will be watching the cycle action unfold in price to confirm the magnitude of that trough. But here is the composite model line on the basis of this analysis, which, as you can see, provides us with a move up from the 40-week cycle trough. We're going to get a bit of a peak over here. Is that towards the end of June, and then another peak over there. And then, of course, we're expecting price to move down into the next 18-month and possibly 54-month magnitude cycle trough in early 2023. The important thing for us to do as Hurst Cycles analysts and traders is going to be to monitor the state of the market as price bounces out of this trough. We're going to be looking at the cycle shapes to understand what it is that they reveal about the current state of the markets. And so let's end this video with a quick summary of the highlights to expect over the next few months. Price is now bouncing out of a trough of probably 40-week magnitude. We're looking for a peak towards the end of June. We're looking for an 80-day cycle trough over here in July, then another peak over here, probably early in August, and then another trough, which will probably be a trough of 20-week magnitude occurring here in September. That's in the NASDAQ. Let's go back to the ES and consider what we're expecting there. And let's start with the analysis that has this trough as a 20-week cycle trough. You can see that we have a very similar picture in terms of the dates and times, but it is simply skewed to the downside. So here we have a peak that is expected earlier in June instead of later in June. Peaks, of course, will occur earlier if the market is bearish. The next 80-day cycle trough is expected in July, just as it is in the NASDAQ. Then we are expecting a not very exciting bounce with some possible peaks over here in July and in August, and then a move down to the 18-month cycle trough according to this analysis in September. As market action unfolds and as we are able to position these peaks in the market, we will be able to determine the current state of the market, because peaks provide us with very useful information in terms of the bullishness or bearishness of the market as price action unfolds. And here is the other analysis, which has the 40-week cycle trough over here. Again, you can see that the trough positions are fairly fixed, with the trough occurring in the middle of July and then the next 20-week cycle trough occurring over here in September. It is the position of the peaks that tends to change. Here again, as indicated in the NASDAQ, we have a peak towards the end of June and then a peak in early August. So those are the important dates to watch as price action unfolds in order for us to determine exactly where we are in this cycle picture. I do hope that you found this market update useful and interesting. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.